Good afternoon, everybody. Welcome back to the Opportunistic Trader. It is just afternoon on December 14th, joined by Mark Fisher, who is the author of The Logical Trader, Applying a Method to Madness. Mark's been in the industry for many years, trading commodities, a lot of experience across all the asset classes. How's it going today, Mark?
Good, Mike. How are you?
I'm good. Ready for the weekend. So what are you looking at these days? What catches your eye at the market right now?
Well, I try not. A couple things. One, I think that the weather in natural gas has improved, and that's why the markets come off. And as weather keeps improving, and there's less time left in winter, you have a slow bleed in natural gas. But I wouldn't be surprised if the end of next week, if we start having, again towards expiration, I don't see who's going to want to be short Jan natural gas going off the board. So I think the end of next week, the market should. Probably Wednesday, Thursday next week should pick its head up again in that gas. We're trading like 390. I mean, I don't know. I think I still think we're gonna go up the board higher than we're
How
deep enough
much
the
of the
board.
move, now that we see where nat gas is here, how much of the move is weather, and how much do you think was really maybe people getting washed out completely by that vol move? Like, for instance, we know that Tampa fund that was public, a guy came out with a YouTube video, things like that. How much of the move was based off of people just getting
I,
blown
I
out?
think I think I think it was people. One, I think it was weather first. I think it was people that unwinding being long crude and short nat gas second. And I think it was the vol move and the vol move third. I don't know. But
Yeah,
I still think. But again, like we talked about before, what Jan natural gas does, March can do just the opposite because each month in natural gas it's its own animal. Like we talked about last time, I think, Mike. We also remember I told you about being short paper assets, being short bonds and S&Ps,
that's what you
right?
said last week, and this week we that's working pretty well.
Yeah, I still think that. I think that's going to be the theme of next year. To be short both in a ratio. I tend to favor a ratio of three mini S&P for every two 30-year bonds. You can look at that. You can look at the DEX versus the Bunds as another instrument. But I think that spread for the first time, being short paper assets, I'm comfortable having that trade on.
Question: this year, one of the key trades of the year has been long U.S. equity, short global equities. Emerging markets have underperformed. Asian equities have underperformed. Do you think that that's a trade that'll continue?
No idea.
So when you're
I'm not.
talking about shorting equity, I was just trying to get a sense of which do you think is the best bang for your buck if shorting equities. Is it U.S. Emerging markets?
I prefer just the U.S. because it's just in my time zone. But if you look at all of them, they all have similar chart patterns. But I think being short bonds and stocks in a ratio is the way to go.
Gotcha. Yeah. No, you've mentioned that for 2 weeks now, and that trade is doing pretty well. Um, what else? So crude oil here, we have options expiration today at 2:30. We've 2 days in a row we've popped up above 53, and we're getting sold back down. Like right now, we're trading 51.11. What's the story with crude, and do you think that the next move is lower?
I think that is too many bouncing balls in the air to really make a call on where the next $2, $3 move in crude is. But overall, I can't see how OPEC's going to allow the price to stay below 50 for a very long period of time. But again, I don't think anyone's on this call really cares about a long-term call. They care about what's going to happen in the next couple of weeks or the next
Right.
couple of hours, the next couple of days. So again, being short paper assets to me seems like a layup. And the second thing that makes sense to me is in the next week, as we get closer to expiration of Jan natural gas, to be long Jan, against the other months, to be long Jan against crude oil, to be long Jan against anything. And I think that again, I don't see how anyone can go off the board short Jan natural gas below 450 with weather still impending.
And that goes off next week or in 2 weeks?
No, it goes off in 2 weeks.
Um, anything else catches your eye, non-nat gas or crude related? Any other commodities you're looking at? I know mentioned
Yeah,
a few
I
weeks
think,
ago you looked at corn.
yeah, I still think if you look at corn, it's basically gone sideways up a little. So along a smidgen of corn. So to me, the natural gas is still the most interesting thing. Being short hard paper spreads is probably also interesting. Again, a master of all trades is a master of none, and so basically that's what's in my wheelhouse right now.
Yeah, no, that's one thing you've always talked about, sticking to what you know best and keeping a close focus on what you know best.
Right.
What about, you talk to a lot of traders, you manage a bunch of different traders. What are their thoughts as we approach the end of the year and start in January?
Well, obviously, the beginning of the year is a very important time frame for all markets. So I would look to use the first day or 2 days of the year as like opening range concepts and trade around that. So if the market tends to break down from the first 2 days of the year in any market, go short with a stop above the high of the first 2 days, or vice versa for every commodity, not just equities, for bonds, for everything. I see people seem to place a lot of their bets, and the market seems just to go. You can look at that, especially in equities and in nat gas. It happens a lot. You know, uh, a lot of different equity indexes. It seems to happen a lot. That the first of the year tends to be the higher of the low, at least for a while.
Yeah. So you think more watch the first couple days and then kind of use that direction and place a trade off that using a stop basically at the higher or the low of that range.
Yes.
All right. That's good information. Any other thoughts on the radar or things you're thinking into the end of the year?
Nah, no, we talked about the pizza industry, right? We talked
Pizza.
about that, right? And we
Pizza,
talked about
and we're also looking at next year being sponsored by Jersey Mike's this segment.
right, exactly. And we talked about the pizza war that's going on, right? Right.
Yeah.
I mean, take a look at, like, I don't know. You have a stock screen ahead of you there? I don't know, right?
I do.
Where's Domino's Pizza this week compared to last week?
Cool. Uh, Compared to last week, we are lower.
We're,
We're
we're
trading, we traded as high as 280 and we're right now trading 250. We're pretty much in line though with the past month or two.
right,
Lower end of the range.
right. If there's really going to be a pizza war, can that stock trade down? Can all the pizza stocks trade down 20%? Why not?
Sure. I think the other way they sometimes look at it is if the economy doesn't do as well, then a lot of people just race to pizza and comfort food.
That's true. That's a good pushback.
But
But again, like I said, again, looking at it from 40,000 square feet up, I think being short hard paper spreads is the way to go.
yeah. That's what you've been saying consistently. We'll keep a close eye on it. Appreciate you taking the time, giving us some updated thoughts. We'll talk to you soon.
Bye.
Talk to you later, Mark.